Hey guys, welcome to TradersMastering. It's been a month since I talked to you guys. I've been a lot busy with other things I'm doing. So all I can say is that I'm going to encourage you guys not to give up in your trading, in trading the financial market. This is because you may see the market moving ups and downs, moving fluctuation from one point to another, but you could not be able to enter your trade. And this is the reason why I brought this trading strategy to you guys. And please don't compare your mate with yourself. Don't compare your other people with yourself. Like comparing yourself with other trader who have 10 grants or 100 grants. So I will encourage you guys not to compare yourself with anyone else. Everybody's journey is different. You have to create your own path. Me teaching you this strategy is for you not to follow what I am saying. It's for you to understand the market behavior, the market dynamic. Once you understand the market dynamic of what I'm going to say today, you are going to trade any time frame of your choice. Remember the parable of the 10 talents in the Bible. You can read that in Matthew 25:14 to 30. So let's get started with what I'm going to teach you guys today. Having a simple strategy is what makes you a professional and profitable trader. As a trader, you must understand yourself before looking for the holy grail in trading. This is because holy grail is what makes you profitable. As a newbie or a professional trader, most of the professional traders always do something like this because you are looking for the holy grail, jumping from one strategy to another. But for you to become a profitable and a master of your concept, remember this. But the truth of all these holy grail strategy is empty. I'm not going to lie. One thing about this strategy is that you don't need to look for market structure on higher time frame. Who cares with the higher time frame is going to do? Normally most traders stick to the higher time frame. I know. Having the higher time frame is not a bad idea, but know how to trade with a lower time frame is what makes you a professional trader. So higher time frame gives you the perspective on a way to single out your buying or selling. That is what a higher time frame does. But it's not going to teach you how to buy or sell, but it's going to give you a perspective of what is going to happen in the future or in the next. So Larry's most profitable 5-minute scalping strategy. This strategy is as simple as ABC in the financial market. Remember I told you who cares about the higher time frame, which is the HTF. Your issue is 2-hour candle and 5-minute time frame. When looking for a buy-in, you look for FVG on the 2-hour and go to 5-minute time frame and look for a market structure shift. Do you see how profitable this strategy is? This is as simple as ABC. Let me come again. When looking for a buy-in, you go to your 2-hour candle. When the 2-hour candle is bullish, you look for FVG. And remember, let your 2-hour candle be above a down candle, a down close candle. And after your 2-hour candle greater than a down close candle, you have to wait for an FVG, which is which is fair value gap, which is the gap, because Larry's gap is without the Larry gaps you cannot see FVG. Larry was the first person, one of the people who discovered the gap, which is called the FVG, which now become a fair value gap. But remember this. So that is it. So when going to your short time frame, when going to look for a short selling, you have to look for a 2-hour candle bearish. Let the 2-hour candle bearish, let it be greater than a bullish candle. I'm telling you again, let the 2-hour candle bearish be greater than a bullish candle. First, after getting to, you have understand the 2-hour candle bearish, which is called the fair value gap, or which is the Larry's gap. Market structure hits the fair value gap. All you have to do in the bullish and the bearish scenario, you go to your 5-minute time frame and look for a market structure shift in the financial market. Do you see how simple is that? So Like this example in this diagram, all you have to do, the fair value gap is very simple. You need to have at least three candle. Three candle is you have the first and the last. The first and the last create a pocket, which is called the first last candle create a gap between themselves. So this is called a gap, which is Larry gap. You can call it FVG, which was later now called by FVG by inner circles trader, which is the ICT, one of the highest trader in the trading industry. So this is very simple. So before further ado, let's get into our trading strategy and see how powerful the strategy is in the financial market. So this is the bearish example. I always told you that when looking for a bearish scenario, always allow your bearish candle to be greater to break the bullish candle. Remember, allow it to break it. So once you understand this concept, you will know what I'm saying. Look at this candle. This candle is still inside this big, very dark candle. What do you notice at this instance? Remember, I told you that there is a fair value gap between between the first and the last candle. There was a fair value gap at this instance. So what do? You go to your 5-minute time frame and look on the concept of looking for the 5-minute market structure shift. Let's go to the 5-minute time frame. So this is our fair value gap at the using the 2-hour candlestick, and look at our fair value gap. If you notice, when price retraced into this fair value gap, remember there was a rejection at which point, which is called the 7 a.m. the 7 a.m. zone, which is the 7 a.m. I told you this earlier. 7 a.m. is when you look for a scenario at the New York session. So what happened? There was a market structure break, which is going to be this one. So what happened? What happened at this instance? You look for a sell. Place your stop loss above these eyes. Remember, when setting a stop loss in the on the short scenario, remember I told you that you place it above. When shorting, when buying, you place it below. So you set your stop loss, put it at least 3 to 1 or 2.5 arrow, which is your risk reward. Make sure your risk reward will be 2.5 if that is the case. So if you notice, 2.5 got it immediately, and this is a profitable trade. Remember I told you guys earlier that fair value gap is how you can trade this strategy. We use the 2-hour candle fair value gap and know what we are going to trade on the 5-minute time frame. So this is the bullish scenario on our strategy. So if you zoom it better, you know that there is a fair value gap between this the first and the last candle. So what happened at this instance? There was a fair value gap, which a fair value gap on the 2-hour. So what do? You go to your 5-minute time frame and look for a market structure shift. So let's go to our 5-minute time frame and look at the 5-minute market structure shift. So look at this 5-minute time frame. This is where we are at the 5 minutes. Remember, this is the 2-hour FVG. What happened at this instance? I told you that you look for market structure shift. What is going on? This is not a 7 a.m. Remember I told you that you also look for an entry during the 2 a.m. zone to the 5 a.m. Look at, this is the 2 a.m. on the New York session. So what do you see happen at the point? Notice that the market was creating a lower high, lower low, lower high, lower low. So the market was creating lower high, lower low. So what do you notice at this point? There was a market structure shift. Market structure shift happened at this point, which is called market structure shift happened at this point. But however, you can decide to take, this is called the AM market structure shift. But for me, we normally take the V. I normally take the V market structure shift. Look at the V market structure shift. Do you see it? It's like this. Let me show you something. Like this. Look at the V. This is the V market structure shift. Are you seeing it? Are you seeing it? This is the V market structure shift. So this is the V market structure shift. Do you notice the way it is? If you notice now, this is the V market structure shift. So that is it. Now, immediately when the market structure shifts on the 5-minute time frame, what do? You look for a buying scenario. You can just decide to look. I normally look at a buying scenario at this point. Place your stop loss below this of this low, and target at least 2.5 arrow. So what do you notice happened? Our take profit got it. So it's very simple. It's very simple. This is the example. I've given you example 1 and example 2. So knowing what to trade on the scalping strategy is very important. Like me, I have more than 5 concepts. Like me, I have more than 5 candlestick pattern which I normally trade. I trade the breaker block, I trade the FVG, I trade the previous highs and lows, which I'm going to talk in depth as time goes on in this channel, because you knowing that determines your profitability in the financial market. So please, if you really enjoyed this video, I will advise you to like, please subscribe for more content like this, share it amongst your friends and family, and I will see you other time. Happy trading. God bless.